Let's talk about a trade that I did quite recently. This company is called Vail, and it's available on the New York Stock Exchange. And it's been in a downtrend for some time, and the entire market has been in a downtrend as well. So, and I took this trade right here. So, what am I doing going long when the stock is in a downtrend and the market is in a downtrend? So, let's take a look at this. For your information, I'm primarily a Wyckoff trader, and I look at these trading ranges and I try to anticipate the direction that they're going to go before it actually breaks out. So let's look at how I actually do that. Let's look at these black lines, for example. These are weekly lines, and I tend to draw these weekly lines and see how the price reacts to them when it gets to it. So we have some really obvious weekly lines. This one was going to act like a resistance. It's been a resistance before, and then it's been support multiple times, and it's not been respected recently, but it could be respected again. We'll have to see. And this line here was also quite noticeable, and we're putting in the trading range right above these lines here. So these are actually not lines, they are areas. So you have to sort of use your judgment and think about that as well, take that into account. So this is a really obvious trading range that we're looking at here. And the thing is that let's look first at the overall look of the trading range. So we have a reduction of supply here, looking really good. And then we have an increase in supply, which is really bad, but we do get a minor sign of strength breaking out from this trading range. Huge volume coming in here, interacting with the 200 EMA. We drop back into the trading range, which is not a good sign, but then we put in this great looking little bar here, elevated volume, closing on its high, and I'm thinking it's time to go long on this. So that was my thinking. I only entered half a position right there because, well, we have this elevated supply, and we have the market in a downtrend, so only half an hour basically entered here. Had to sit through all of this stuff here, wasn't very happy about that, and I was actually thinking of getting out of the trade when it put in this strange gap bar with huge volume. So I thought maybe stay in for some time. Luckily I did, and we have this significant bar, S bar as I call them, and pretty decent follow through, momentum loss, chickened out, and planned on entering on the pullback, but never did. And that it gapped away from me. I'm not chasing, so I'm out of the trade. So let's take a look at this in even more detail now. So what are all these other lines? Well, this blue line is the anchored VWAP. I can anchor it from various places to see how the average price has been through this entire time here from this point and forward. And this is volume weighted average price. So I know that a lot of people have the trades at this price on average. So we want to be above that line. That's called an operating level. And we also have the monthly VWAP, which is another level that institutions sometimes watch. So that's good to have in your chart sometimes as well. And again, we want price to be above that for bulls to be in control. But you can't always wait for price to be above these lines. You have to enter sometimes before that. So keep that in mind, but it's good to see that as a confirmation. You can see in my volume profile here that most of the trading range, most traders entered high in this trading range. And that in itself doesn't mean too much, but this red line here is just on this high volume node. So that's also an operating level. So let's go into the different bars and discuss each interesting bar in this trading range because we'll get a lot of information from the actual tape reading, as it's called. So we have this downtrend, and we put in this bar here, this gap down on huge supplies. That's preliminary support. We bounce a little bit from that, and then put in the sell climax, final selling from the bears, and we get a little rally called an automatic rally, or an AR as it's called. And then we get a selling test, or a secondary test, as it's called in Wyckoff terminology, which actually happens quite high up in the trading range. So that is a structural failure on the part of the bears. So that is a really good bullish sign that we get an ST such high up in the trading range. And that is also followed by an upthrust, which can be both bearish and bullish, but I'm going to judge that as bullish for now because we have that structural failure. And a second sign that it's a bullish upthrust is that we have again a structural failure on the bears. They cannot break this local low, and they cannot make it to the bottom of the trading range. And also supply is actually fading here, which is a really good sign. So at this point, we're pretty bullish, but it's unusual for huge breakouts from such short trading ranges at this point. So we get a good bar up, and then we're failing to break out the trading range, and we have to make it to the bottom of the trading range, which is completely normal. Don't forget that 80% of all the breakouts from trading ranges tend to fail. So that's good to keep in mind. We should make it to the bottom of the trading range. Now we actually break the sell climax. We spring that, and we do it on elevated volume, which is not a good sign. But then we revisit this spring, and we spring the spring, and we do it on reduced volume. So that tells me that sellers, we're out of sellers basically. We came down, we flushed the liquidity below this low, and we actually flushed it again under lower volumes. There are no more sellers down here, and indeed price can rocket up to the top of the trading range again and fail again the breakout, which is also normal. Now we're starting to get a little bit of price movement up and down on elevated volume. This is not a good sign. We want to see reduction of volume if we're going to conclude that we are still in phase B here. So, but then we start to get a move outside the trading range. And this move is actually 1, 2, 3, 4, 5, 6 closes above the AR and 5 closes above this upthrust here. So that's when you have more than 4 closes above, we tend to see that as not as an upthrust, but as a minor sign of strength. Or if it's the major sign of strength, could actually be the major sign of strength, but it shouldn't break down into the trading range that much. Having said that, we have reduction of supply on the down move. So if this is a spring, this should be an LPS, last point of support, and this shouldn't be broken. And it puts in a great bar here that closes above all of this price action right here. And I'm thinking that, yeah, maybe we could make it the top of this resistance, this weekly resistance. We should be able to break this now. That's what I'm thinking. I'm hoping at least, because we have really good volume here, so it's looking good. And the thing is that all this price action right here, it's a lot of overlap. So I'm thinking I could maybe put in a limit order at the midpoint of this bar and get filled by a wick or something like that. And indeed I get filled, but it has a terrible follow through. And I actually have to sit through all of this price action, which looked really bad at the time. but we are unable to close below this low here, which is good. Supply is really elevated. The only good thing about all the supply being elevated here is that bears are not able to break this low. So that is in itself a good sign. But at this point, I'm thinking that if it comes back up here, I'm just going to get out. But then it puts in this really great gap up bar on high volume. This rivals this volume here. And indeed, we have to sort of repair this area or build some confidence here in order to go higher. So I'm thinking I'll stay in and see what happens. And it ranges here for a little while and then it breaks out. And we actually close above this bar that had all the supply in it. So we have a great move up here on increased volume, and we have a good follow through. But there is some supply in this bar as well, because we have maybe like 30% less volume, but we have like 10% movement to the upside compared to this bar. So I know there's supply in this bar for sure. And then we have an inside bar, which is momentum loss for sure. And I'm thinking it's going to react to this weekly level. And I'm putting my stop loss right below that. Remember, we are in a bearish market. Let's look at the market at this point. Yeah, it's this bar right here. The market is slightly bullish now. But yeah, it's been a pretty bad run here. So I'm thinking I'll take my little trade off here and maybe I can get in again, which I didn't for some reason. And it went away without me and I'm not chasing it. So that was my little trade. That was my thinking for this trade. I hope you learned something from it.